Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to U.S. Markets Wrap with me, Ryan Huang. We had a pretty flat session last night as traders wait for more retail earnings as well as more commentary from the Federal Reserve. And we have the Dow Jones Industrial Average slightly underwater by 0.1%. Same for the S&P 500, pretty much flat, just slightly lower by 0.01%. And the Nasdaq Composite squeezing out a very small gain of 0.03%. So what's going on here? Let's check in now with Steve Sosnick. He is the Chief Strategist for Interactive Brokers. Steve, good morning. Thanks for joining us on the show.
My pleasure, Ryan. Thanks for having me.
Great to have you on. So let's start first with what we should be looking out for. It doesn't look like we've got a lot to trade on in the last few hours. What's going to be something that might move markets in the coming days?
Well, there's no shortage of things that could move markets in the coming days. Just there weren't any today. We've got Home Depot earnings tomorrow, which is a big read on the consumer and the housing market. Lowe's and Target and TJ Maxx, which are similarly important reads on the consumer on Wednesday, and Walmart on Thursday, which is other than Amazon, probably even more so than Amazon, one of the best pure reads on what the consumer is doing. So those are all very important numbers. And of course, on Friday, the most important event of them all is Chairman Powell's address to the Jackson Hole Economic Conference. And considering that the odds of him getting reappointed to the position are essentially zero, this will be his last time addressing the conference in the keynote speaker role. So there's a lot to talk about this week. Just none of it happened today.
Yeah, Steve, so let's unpack the earnings, what you're expecting at front when you are looking at some of the recent consumer data, what some of the tariff talks have been playing out into. What are your expectations when it comes to the commentary and the business outlook?
That's really where it's going to be about. It's not necessarily going to be at how it was last quarter. It's going to be about what they're looking for in the coming quarters. And it's going to be very tricky because the tariffs really didn't go into full effect until it's been less than 2 weeks. And we still haven't resolved all the tariff issues with China and Mexico, which, as you could appreciate, are two of our most important trading partners. And so it will be very difficult to see, are consumers pulling back? Is there a big difference between low-income and high-income consumers? And that will probably be contrasted between Target and Walmart, because Target is perceived as not high-end, but medium-end shopping, and Walmart tends to be lower-end, not the lowest end, but lower-end. And what happens in a rough economy is you see higher-income consumers moving down from Target to Walmart is question number one. Are low-income consumers just actually moving to dollar stores and out of Walmart completely? So there's a lot of commentary, and we're going to have to see how they're going to incorporate tariffs into their pricing role, because Walmart originally said that they wanted to pass on tariffs to their customers. The president kind of yelled at them about that, but subtly prices are starting to go up. So there's a lot of moving parts here.
Yeah, a lot of moving parts, and we will get some sense of how the consumer is spending, maybe a change in spending patterns even. And also talk about what is going to be on the radar. Data, we've been reacting to some of the data last week on the front of inflation, and it seems like there wasn't as strong a reaction to the miss on the producer price index numbers that you were expecting. Walk us through what happened. How much of a surprise was it?
The numbers on Thursday morning our time were a monstrous surprise. No one was expecting 0.9. That was way beyond any expectation that anyone had. And interestingly, both bonds and stocks really liked the CPI numbers that came on Tuesday our time. And both sets of markets rallied. They were in line. They weren't necessarily good enough to induce a big rally, but certainly from the stock point of view, it doesn't take much good news to induce a rally. Just the slightest piece of good news is enough to get traders buying stuff and then continuing to buy them throughout the day. The more interesting part to me was Thursday, because bonds gave back everything that they gained on Tuesday, which to me seemed very rational. There was all this expectation that Fed could be aggressive about cutting rates. Then the bad PPI numbers come out, and people have to rethink that. Stocks barely moved, and that is more of a testament to the buy-the-dip mentality that persists in the U.S. And we're seeing this. I've used the term that the half-life of dips seems to be getting ever shorter, meaning that traders are so afraid of missing a dip that they either don't sell at all or they are so quick to buy any slight dip that the dips are really, pretty minuscule. And so as a result, you had this really divergent move in between stocks and bonds on Thursday. As I look at the numbers, they're all moving a little bit in the wrong direction. None of them are terrible. None of them are really worrisome. But over the last 3 months, both core PCE, which is the Fed's preferred inflation measure, and CPI, not to mention PPI, but those two have been moving up ever so slightly, but certainly in one direction. From 0.13 to 0.23 to 0.32. That's the changes in CPI over the past 3 months. When you annualize that over the 3-month period, that's about 2.7%. That's not bad. But if you're concerned about whether tariffs will induce more inflation and you don't have the data, I think it behooves the Fed to hold their horses a little bit. The problem is, of course, the president does nothing but yell at the Fed chair on a routine basis. And so then you add into the psychological question of, does he give in to some of the pressure just to quiet the president down? Or does the Fed basically say, you know what, we're sticking to our guns in spite of what you say, and maybe because of what you're saying? So that's a whole psychological game. It's very hard to get a read on.
Yeah, especially so when we had the last meeting with 2 dissenters. So a lot of moving parts when it comes to what could move markets and maybe even new highs as we grind into records again on the back of some of the movements or rotation away from some of the big sevens. All right, we've been in conversation with Steve Sosnick, Chief Strategist for Interactive Brokers, helping us to break down the latest movements in the markets as well as what to expect in the coming days. Steve, always a pleasure having you on the show. Thanks so much for your time and insights.
Thank you so much for having me once again, Ryan. I hope we get to do it again soon.
Yep. Catch you next time. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.